If there is no problem, there is no issue on the financial statement, audit report, there is no problem, right? Everything is perfect in the company, no material problem, you give a clean report saying that financial statements are giving true and fair view. But if there is a problem, if there is some problem, it can be any problem, but some problem in terms of audit or account, you come to this side. Your problem, if there's a problem, you come and modify the report. If you don't have a problem, you give a clean report. That's what you call unmodified report. But if you have a problem, you give a modified report. So there are two types of modified reports. Modified reports can end up in unqualified opinion, or modified reports can end up in qualified opinion. Right? Let's come to this unqualified part later. We come to qualified opinion. As an auditor, I may face two situations to give a bad opinion. Qualified opinion means bad opinion, right? I'm saying financial statements are useless. One problem is there is a material misstatement in the financial statement. The other problem is there is an inability to collect sufficient appropriate audit evidence, right? So one is material misstatement, other one is inability to collect sufficient appropriate audit evidence. Let me give you an example of material misstatement. Say for example, in the earlier question, the client has to make a provision of $285,000. He has not made the provision. So that's a material misstatement in the accounts. Understood? Now, so if there's an immaterial misstatement, we don't care. We don't consider here. That goes to our summary of unadjusted differences, right? And we take the total and consider there, not here. But if the problem is a material misstatement, then we come and check, is it material plus is it pervasive? Now, what is pervasiveness means? The problem is so big. The problem is so huge, like it is hitting each and every part of the financial statements. That's what you call a pervasive problem. Now, I have a profit of $6.8 million, and out of that $285,000 worth of data is going bankrupt. Is it a pervasive problem? It's not a pervasive problem. But out of $6 million profit, there is a $7 million worth of data goes bankrupt. That is a pervasive problem, right? Say, there's a fraud happen on inventory. Can't be a pervasive problem. But fraud happen on the whole organization. That's a pervasive problem. And accounts clerk who is a inventory ledger accounts clerk has done a fraud, not a pervasive problem. CFO has done a fraud. That's a pervasive problem. So in your book, they are given what is pervasive, right? Please look at that chapter and please read that properly. So 100 million profit, 90 million worth of problem, that's material plus pervasive. If it is material and pervasive, we give an opinion called adverse opinion. Financial statements are not giving true and fair view. That's what you call an adverse opinion. No, it's a bad opinion. If the problem is material, 100 million profit, 10 million fraud. Material, yes. Pervasive, no, it's not pervasive, not big enough. In such case, I give qualified, or it's called except for opinion. So in that except for opinion, what I say is, except for the inventory problem, which I have reported earlier, financial statements are giving true and fair view. That's what you call except for opinion. So the qualification comes on the top, then comes the opinion. Except for this problem, financial statements are giving true and fair view. Sometimes you may face a different issue. inability to collect sufficient appropriate audit evidence. Right? That means so that means inability to collect sufficient appropriate audit evidence means um, say you want to go to a warehouse. The client did not allow you to go to the warehouse. So you don't know what is inside that warehouse, what's the value of the inventory, nothing you don't know. So you don't know something. That's what you call inability to collect sufficient appropriate audit evidence. Not that there's a fraud, we don't know. Now here we know there's a misstatement. Here we have not performed the procedure because the client did not allow us to perform the procedure. That's what you call scope limitation. That's what you call inability to collect sufficient appropriate audit evidence. That again, two parts. It can be material and pervasive. Again, if it is immaterial, it doesn't come here. Immaterial problem goes to management later. If it is material and pervasive, in such case, what we do is we let's say for example, general ledger, right? They did not allow us to access the general ledger. So general ledger is like a backbone of the company, financial statements. So without accessing general ledger, I can't do an audit. So it's material plus pervasive. So what I do, I give a disclaimer of opinion. That means I tell financial statements are, I'm not in a position to express an opinion. I'm not giving you opinion because you did not allow me to check the general ledger. I don't know, then I can't do an audit. That's what we call disclaimer of opinion. On the other side, we give a qualified opinion. That's called except for opinion. When it comes to except for opinion, it's not a big problem. Like they gave us every access, but unfortunately they did not give us access to inventory system or the warehouse or some small part they did not allow us to access. It's material but not pervasive, like GL. If they don't give us access to GL, I can't do the audit. But if they don't give us access to a particular small section like a payroll, something like that, I can still do the audit, but I'll give a except for opinion. Except for the payroll, financial statements are giving true and fair view. Then there may be few other problems. These are not actually problems, these are additional disclosures by the auditor. So that's why look at this here. Now these are qualified opinions, but this is unqualified opinion, clean opinion. Only the report is modified. It's a modified report, but an unqualified opinion. Emphasis of meta paragraph. So sometimes there can be a uncertainty in some numbers. You are also not sure, they are also not sure. Say for example, there's a pending court case. If the pending court case is if the pending court case is around 70 million, or if the pending court case is it's a failure, then there's we have to pay 100 million. So, but we don't know whether it will be a failure or success. We don't know, but it's a significant amount. In such case, as an auditor, you can't ask the client to make a provision if it is not probable. So you will ask the client, hey client, you disclose it. I will also emphasize it. So client will disclose, look, there's a pending court case going on. We may have to pay 70 million or 700 million in case if we lost, but the court case is too early to decide like that. He will put a note there, a disclosure. As auditor, I will also put another note saying that we are not in a I will also put a note and tell that, look, I will put a note and tell clearly as auditor, financial statements are giving a true and fair view, but there's a problem like this. Be careful. That's what you call emphasize of meta paragraph. Then, yeah. Okay. Targets or okay, it has an emphasis of meta paragraph. Fine. Other one is material uncertainty relating to going concern. That means a company has a going concern problem. So if any company has a going concern problem, we have discussed this multiple times, the company has to disclose it, right? If they don't disclose it, it's a problem. If they don't disclose it, it's a material misstatement and we may end up in giving an adverse opinion. But they have disclosed it. They have appropriately, they have disclosed it. Then I don't have to give a bad opinion, no. If they have disclosed it in an appropriate manner, then what I'm going to do is I'm going to give a clean opinion, but I will put an emphasis of meta paragraph. That emphasis of meta paragraph is what that's a special emphasis of meta paragraph that's called material uncertainty related to going concern. The client has a going concern problem. He has disclosed a going concern problem. Then I also go and disclose it. And finally, the other meta paragraph. Any other problem an auditor might face in audit, anything, any issue or any problem, anything, whatever he is facing, he may put in a paragraph called other meta paragraph. Understood? So it can be there's a coming accounting standard change, or audit methodology is changing, or auditing standard is changing. You don't modify your opinion, you give a clean opinion. So, but what you do is you put a other meta paragraph there.